Alright folks, so I made this video and my microphone wasn't working, so this is a voiceover. Forgive me for that, please. I'll try and go through the gist of it so that I can get most of what I was trying to say into this voiceover. So it's going to be a bit weird. You'll see me talking over there and you'll see charts moving around. I'll try and comment over what I was saying on this video, unrecorded of course. So let's see how we can go with this, and I'll actually try and cut out some of these bits in between as well. So here we are on the currency charts, looking at the euro across the top there, euro yen and dollar yen. You can see the euro's just pulled back into support, whereas the dollar yen hasn't actually rallied. And we've got that line in the sand there at about, I don't know, just above those candles, and what, 154.75 or something like that. And I think that's the line in the sand that Japanese have drawn in. Look at these big hanging man candles across all of these charts, including the dollar yen and the euro yen and some of the others like the Swiss yen and the Aussie yen and so on. So that's a bearish pattern, the hammer candle, despite the fact that it looks pretty bullish actually. But it means that the market tried to push down. It was countered by the bulls, moved back up again, but didn't get beyond there. So it is actually a bearish candle overall, and hopefully the dollar yen can move down. We're not trading the euro. We took profits on our longs a couple of days ago, and we're not in the euro at the moment. But we're looking at the dollar index just above my head there as well, and that's also looking pretty positive. And I think the overall sentiment, many people think, is positive for the dollar, which means negative for other things. Now let's go across and have a look at NASDAQ. We've had 7 days down on NASDAQ and S&P. S&P, the chart in the middle at the top, has reached its 100-day moving average after 7 days, formed a spike low. We also saw a bit of a spike on the NASDAQ as well, but that's below its 100-period moving average. That's the gray line that you can see just above Friday's candle. So the NASDAQ looks a bit negative. We are hedged on the NASDAQ. I'm not in the S&P. So we've locked in a lot of profit on the NASDAQ, and we've got a swing high there, and we've got that horizontal line just drawn across. Maybe that's where we will bounce, either today or tomorrow. Same thing with S&P. We've reached the 100-period moving average after 7 days with a spike low, and today's just bouncing back up again. I don't know exactly where these markets are going to go. There's a lot of differing opinion on whether the markets are bullish or bearish into the rest of this year, with elections coming up, Fed rate cuts, and all the news that's coming out of various parts of the world, including China. And we've got conflict in the Middle East and conflict in Ukraine. So there's all sorts of moving parts here, and the markets don't like it. It's a bit uncertain, and that's why they've sold off. That's not the only reason they've sold off, of course. And then going across to energies, we've got URA and UEC on the left here. Those are the uranium instruments that I trade, and I'm long on both of those. Those have basically been going sideways for the most part of a month or so. And then natural gas, well, we're long on natural gas on the OANDA ETF. Well, I am, but not on the futures. My futures roll over tonight, so I had to get out of those at break even after taking profit on the rally recently. I'm long on the OANDA ETF though, and we've moved above the 200 and the 100 period moving averages, those lines there, with this bull candle. We've also reached that sort of swing high, and we want to break above there and hold above there, and then keep moving up towards $2 and then $2.15 or $2.20 and then $2.35 or $2.40. So that's the overall sort of plan. Looking at the day chart on natural gas, let's have a look at this quickly. And what you can see there is a nice hold above that 78.6% Fibonacci, a pullback more recently, last few days, back to the 618% Fibonacci. It held there, and now we want to move up above that swing high, above the 38.2% Fib, break up there, maybe up to the top of that swing high, and then back down, but no lower than the 38.2% this time. So we retrace 786, we retrace 618, and we want to retrace no more than 38.2 on this last occasion. And then I'm aiming for a rally back up to $2, and then $2.15 or $2.20, and then $2.35 or $2.40, around that gap, which I pointed out in the last video, and you can find that link on this channel. Now, cocoa, we're looking for tops on cocoa still, and it looks like we may be in some business soon. Now, we've got 3 angles of attack on cocoa, which I've drawn on this chart. We've just broken down through the steepest line of attack, and we've got the shallower one down below, that sort of intermediate level, and that's where the 100-period moving average is, and then below that, we've got the much shallower angle, although it's not in itself all that shallow, just in comparison to the others. And that's that long line at the bottom that you can see coming up. So there, very clearly, 1 angle, 2 angle, 3 angles of attack. We've broken the last one, and we want to pull back down to the intermediate one now. We've got to get through that swing low and the 20-period moving average on the way down. And that would take us down to that level. I can't see the numbers because I haven't got my specs on, but where my cursor is. And then down to that trend line, and that's where the 50-period moving average is. And then once we get there, we'll probably bounce a wee bit, and then hopefully we'll start getting a move back down to the longer term trend line, much, much lower. Now, WTI, we're short on this. What can I say? Actually, this chart's very similar to gold and also more recently uranium, in that we broke out through the top of the channel and then pulled back straight into it after trapping the bears when breaking out through the top and then collapsing back down into the channel and then trapping the bulls basically in the same move. That's what's called a false breakout or a bull trap, and this happened 3 times, most recently on uranium and gold, and now on WTI. Well, you want to see this pull back down into about $70 and then below there. Now, going across the metals, we've got gold and Bitcoin. Well, it's not metals, it's gold and Bitcoin, but I've put them in the same chart. Now, gold's pulled back down to its channel top. Look how similar this is to WTI and uranium quite recently in the way that it broke out through the top, pulled back and collapsed back into the channel. That's WTI that I'm using as a comparison for gold. Exactly the same chart pattern, a rising channel, breakout, trap through the top, breakout, trap back through the bottom, and if it really wanted to be nasty, it could break out back through the top again after trapping those who went short on that false break higher. I'm hedged on gold, and I don't know which way this is going to go, and a lot depends on interest rates and war. So right now I'm hedged, and I'll figure that one out as the day goes along today and as this week progresses. We've got some interesting news coming out on Thursday and Friday. Go and check out your calendar. Quite some information coming out, including PCE and the GDP for the US. So watch out on Thursday and Friday. We've also got jobs in the Michigan survey. So NASDAQ, what will we see? Well, we've had 7 days down on NASDAQ and S&P. We may need to get 8 days down. The cycles are either 7 or 8 days. We either bounce on the 7th or bounce on the 8th. We've had 7 on each of these, and followed by a spike low on the NASDAQ and the S&P. Not as much on the NASDAQ, actually. S&P was a bit more pronounced. And the S&P did it as 100-period moving average, and it's moved down in that block of 7 and trying to bounce. Whereas the NASDAQ has not bounced at its 100-period moving average, and we've got some space below us before we get to the 200. Quite some space, actually. Quite a long way down to go. So I don't know which way these are going to go. We'll have to keep a close eye on it. I'm partially hedged on some of these and others. Working out really well at the moment, but I need to be very careful that we get the direction right and the timing right. So S&P is definitely broken out of that rising wedge, which we spoke about so often, and actually turned out to be a real breakout and not a false signal, as many people thought it would be. And we've just moved down from there. So far, so good for the bears, and we've taken profit on our short side and now hedged on NASDAQ. I'm also short on NVIDIA, hedged on that. I'll be looking to exit that hedge. We've got some good profit on that. And then also I'm long on Apple and long on Tesla. And I suppose those are just trying to find some bounce right now. Generally, they're pretty cheap, Apple and Tesla. We've got Tesla earnings tomorrow, and I suspect that we may find that Tesla's earnings really don't matter that much. They'll disappoint or they'll excite people. But I think we may have a bounce down or gap down, gap up, or gap up, gap down, or just a gap up or something like that. But Tesla's pretty cheap at the moment, and I think we could see some upside for both Apple and Tesla. And longer term, we're starting to enter those areas where people are getting interested in investing in good companies. So Apple and Tesla, watch out for those. We're long on those, short on NASDAQ, short on NVIDIA, nothing on S&P or AMD. Well, folks, I hope you enjoy that. If you enjoy this sort of thing, why not subscribe? It really helps the channel grow. And if you want something slightly more than that, you can press the join button below this video and you'll get the YouTube member videos early, and you'll get extra information as well. And it's pretty cheap. It starts at about $1. And if you want to go beyond that, you can join my private group and come and trade live with us in our Discord, and there's a link below this in the channel. Take care, have a great trading day, and I'll speak to you soon.